Morning, Steve Freed in Chicago with the morning grain comments. Well, the market trend of lower continued overnight. We started out a little better, and then once Europe started trading, we started pushing futures lower. Beans are down about 10 to 11 cents. Corn and wheat down 7 to 8 cents. Yesterday we heard that a couple of large index funds were exiting the commodity market. Some people blame this on lower returns, some people blame this on Dodd-Frank regulations, and others blame it on new administrations that want to get out of proprietary trading and move back into the normal banking industry. But that has pushed prices down to levels which we would consider first to be technical support, or maybe even pushing through technical support, but we're also now getting a little bit oversold. U.S. cash markets have been responding to this by moving higher. Soybean basis levels are near record high levels for this time of year. Central Illinois corn basis is record high for this time of year, and wheat basis are also historically high. This drop in futures prices has pretty much stopped farmers selling, and at least nearby for the domestic corn and for soybean exports and domestic bean exports, demand remains very high. For South America, it looks like the weather's turning better. It's also a reason why the market's been under pressure. Dry Argentina got a little bit of rain overnight, and the European model suggests over the next 10 days they could see normal rainfall. In southern Brazil, they're also should be getting some rain, and in northern Brazil, where it's been wet, it's beginning to dry out. And so all these conditions point to a favorable end to the South American 2013 soybean crops. Just one note, talked to the Maya farmer in central Illinois. He said he's received about 6 inches of rain since last year's harvest. He's still well below normal, but actually the tile is beginning to run, and he's in better shape now than he thought he was going to be going into spring planting. We still are dealing with the baseline numbers USDA recently sent out, talking about big 2013 U.S. crops and increasing carryouts. The one thing that was interesting yesterday is that people focused on the numbers that the USDA was talking about in bigger demand next year. So we lost a little ground in the old new crop corn and soybean spreads, because now the market feels we have to have these big crops to satisfy what the USDA is considering big demand. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.